Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening of Wednesday, the 17th of January, 2024, and the time 6:05 p.m. Temperature in Chicago, 16 degrees. Believe it or not, that's considered now real warm. I mean, real warm. I was just looking at pictures. I don't know if you know how they do the switch tracks. You know, we're a big city, and you get the elevated and the regular trains all coming into downtown. They set the tracks on fire right where the switches go so that they can avoid them from freezing up. It's fascinating to watch. You see it all the time. When you first see it, you go, oh, there's a fire up there. There isn't. It's very controlled, but otherwise the switching gear freezes. I only mention that because we're going to go to 42 degrees next week, and part of that has to do with heating oil a little bit weaker, natural gas, because the market's now looking at the end of the month and it's saying, aha, hold on here. Things are a little bit what? Going to be warmer. So this Arctic blast, maybe it's run its course. More snow might come as you get warmer, but the Arctic blast looks to be over. Something that isn't over just yet, and we'll get to the rest of everything I'm saying, is my 30-day research sale. It ends tomorrow. So you have one more day to take advantage. And what I did is I so often say, have a cup of coffee, sit back, look at my videos, blah, blah. Well, I priced coffee in Chicago 6 days ago. And Starbucks large, regular coffee, $4.08, Pete's large, $4.13, Dunkin' Donuts, $3.56. You throw in a tip, you're over $4, maybe $4.50, depending on how generous you are. So I said, I'm going to make for just a short sale. It ends tomorrow, Thursday, the 18th. $3.98 for 30 days, $4.48 for 30. Once you subscribe, you go into the member login area, videos and all are there, and you can change your subscription. You put the day you want it to end. You can let it just keep running. That's up to you. I think you'll find that once you get and see what I do, and ideally results that I hope are impressive to you, you say, you know something, hold on. This is something completely different, because what I do is I show you chart action in real time as I'm recording and why I'm recommending, where I'm recommending things, how I'm coming about it. I mean, I really teach you the whole setup. The funniest part to me is, while I'm talking coffee here, so far, this is the 17th, I've had 2 coffee trades already this year. I'm really happy. So are my clients if they took them. All right. So we'll see what goes on with that. So as we come back to the markets, I wrote a fairly lengthy, full research report tonight for my subscribers of that. And in it, I explained that we're in a corrective mode right now. Now, I don't know if the market's going to give you a 10% correction, 20% of the amount that it went up from the end of October right until when? Christmas. And this is the pullback. In the metal markets, it's not a heck of a lot different. And as we get to the charts now, we'll talk about that. The dollar index still strong. Banks around the world are coming to the realization that this idea and this euphoria that we got in December, that the banks, be it the Bank of England, be it the European Central Bank, our Federal Reserve, they're going to cut. They're going to go into a lot of cuts, probably getting 6 cuts this year, 1.5 points of rates. But as the data's rolling in day by day in January, we're seeing the economy did better than people thought. I was the first guy out here, and in November, I said to you, actually it's the beginning of December, and I said, do you see what the consumer's loading up on debt? What do you think they're doing with that money on their credit cards? I said they're buying Christmas gifts like mad. Well, now we're seeing retail sales a beat. It didn't take a genius to see that. If they're loading up on the credit cards, it's either groceries or they're buying gifts. Probably the gifts, and that's what people did. Now we'll see how this all settles in. Labor's still strong. You haven't seen the weakening of that, and people are paying attention to all that. On the other hand, you're watching interest rates climbing back up, and that's getting interesting because you're back into new, basically in the 10-year note, just about the highs of the year right now. Admittedly, it's early in the year, but you're not getting the break people thought. And I think that's going to happen until we get to see how the data from January is going to shape up at the beginning of February. Now, we do have an FOMC meeting at the end of this month. It's widely expected they'll do nothing, but it's going to be the economic data of this month that we get to see, the jobs report, CPIs, and so on, that is going to be so important. When you look at the gold, I hope that the market gives you a break back to the 18-week average of closes at 1986.70. It would be the ideal situation that if it can hold there, then you start anew, maybe another uptrend. Right now, you're in a corrective mode. You had this run-up from basically this early part of November, spiked up here, if you'll remember, in December. Okay, the Houthis, everything going crazy, the war and what's going on. You backed off, and you're caught in this part. You're caught from 2150, basically into this just under $2,000 level. If you think about it, all right, so you get a big break of that. And where are you? Well, you're coming back down. Maybe you're even going to test these lows at this point in time. Are we trending? We are not. You have a market that's got a higher high on the swing line. I created the swing line years ago, and it looks at the previous bar. The reason I say bar, not day, this works on 15-minute charts, 5-minute, 1-minute charts, weekly, monthly, yearly. It doesn't matter. It looks at the bar before it, and there's 5 rules. And via those rules, the line is drawn. And that way, I don't guess what should be happening. When you're trending, if it's an uptrend, you're looking for higher lows, higher highs. In a downtrend, lower highs, lower lows. When you have no trend at work in a corrective mode, higher high, lower low. And that's the basic pattern that we have right now. I then look at moving averages because they're a lagging indicator, but they give you an idea of where support and resistance might show up. In this case, the resistance is now 2048.20. Once we fought a battle there and closed 2 days ago under this, I say days ago because we're already into Thursday trade, and that's this dot you've got right here. But when you look at that and you closed under it, you threw the market for a looper. You put it back down. You've gone to the 200-day average. The 100 is 1993.90. And if you look at the Bollinger Band with it, you're coming to the support right there. A Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. In essence, the first time you hit it on the upside, think of it this way. Bingo, money should come off the table. Go to the downside first time you hit it. Bingo, money should come off the table. I don't know if you're long, short, or whatever. What I do not teach is you don't go out and buy Bollinger Bands to get a bounce, nor do you sell them to get the break. You'll say, well, yes, look at how that's working. And I'll go, yes, it worked real well. You lost your shirt on the way up. You probably broke your account if you stood in there. It's not what it's about. That's my opinion, at least. Other people have different opinions. Everything I do ties all this with momentum. Momentum can be a leading indicator, especially the slow stochastic study. In most cases, RSI, MACD, people will say, well, it's a lagging indicator. To a degree. But when you embed, and you have to take my enhanced Bollinger Band course to understand that term, or it means lock in. When you lock in an uptrend or a downtrend, it's often a leading indicator. It's saying until that's lost, the odds favor the market's going to keep going down or up, depending if it's a bullish or bearish situation. In this case, you just have an oversold market. It might embed. It'll take another day or so to know that. The gold-silver ratio, once you got over and fought this battle at the 18-week average of closes and got back over it, and this is a daily chart, so this is a daily one. I do them both ways. Once you got over it, game over. The market stayed over it, and until it gets back under it, gold stays stronger than silver. So the higher these numbers go, in a perfect world of no commission, no markups, you would be looking that you need right now 88.5 ounces of silver, roughly, to get 1 ounce of gold. Got it? And the higher the number goes, that means obviously silver's worth less than gold. When you look at the silver market, embedding, not yet. You can't count what today is doing because we don't know whether we're going to finish. Both numbers were under 20 for the Wednesday trade. They were both under 20 for the Tuesday trade? No. So you just have an oversold market, all right? It's that simple. Where could you go? Maybe the 22.20 level. I don't know, but it's in there. In the copper market, China came out with its growth factors, and they're claiming, I say that very facetiously, they're claiming they beat their year target of 5%. They don't embarrass the Chinese president. They massage numbers, in my opinion. And they massage them in such a way that when they're okay for you to see, they'll let you see them. And when they're not okay, you can't see them. Think Chinese unemployment for youth. They hit it. Now they're saying, well, they want it. They want to show it again. Part of the problem that President Xi has created is via COVID, and there's a breaking report tonight, right now, that before the COVID pandemic hit, the Chinese people, their scientists had mapped COVID. I don't know any more than the headline that I read just now. Don't take it any further till you read the story, okay? But if that's the case, then they've always denied they didn't know about it. I'm confused right off the bat. Again, a little bit of knowledge is dangerous on my part. I just want to say I saw the headline come through, and I don't know what it means. In any case, their reaction to the COVID pandemic drove Western business out of China. They stole patents. They changed the laws right in front of you. They will go in as an example in the stock market. Things aren't going right. We ban short selling. How do you trade? How do you invest in a country like that? So what President Xi did, he drove everybody out. He sees the reaction. So they are at Davos now. I hope you're watching it every day. I spend the hours watching this. And they're trying to convince the West to come back in and invest. They're changing things. They're going to be more open and blah, blah, blah. Well, we hope that they do, but the proof is in the pudding. Do it, and then the West might follow suit. Just say it. Don't be an idiot, West. Don't go there until they make the changes. Let them prove to you. You already went there and lost God knows how much. Building factories, not getting your supply chains. I'm not talking politics here. Please understand in the sense that I'm not against the Chinese people. They drove the people out to India, to Malaysia, to Vietnam. They just handed the business via their policies. They now want that business back. Anybody out there in business knows that getting a client and keeping them is the strongest thing you can do. Driving them out and trying to get them back, one of the hardest things you can do in business. Not easy. All right. That's the point that I'm making. So copper, I bring this up because we keep hearing from them, we're going to inject money in things, we're going to do infrastructure, we're going to do blah, blah, blah. Well, is it working? Copper is called by nature Dr. Copper. Why? It tells you what the economics of the world look like in industry. Why is China so important? Because they traditionally have been, in the past decade, half the consumption of copper in the world as their economy grew. Don't get me wrong here, folks. 5.2% growth is something we'd all love to see. But for them, it's not a good number, and I'm not believing that it is 5.2%. In the platinum market, I see the market just continuing to slip down, and it is embedded. So this is a very bearish situation. Until the red line closes over 21, the rallies in the market most likely going to get sold, but it's dropped so much. What does a rally mean? That becomes your problem. In the dollar, are you going to go up and challenge that 104 area we've been talking about? You're already overbought. You're over the Bollinger Band. You get over it, you pull back under it. It's back and forth at it. The number for the Bollinger Band is 103.22. You're at 103.20 and a half for all purposes. So you're right at that number. All right. So I look at it and I go, okay, there aren't a lot of things yet to do in the financial markets, gold, silver, and that nature, even the platinum as much as it's straight down, because we came off that crazy move in November and December, where things just went up, up, and away. You saw that take place. You come over here, you can see October up. The metals finally started breaking earlier in December. And why did, well, the dollar did. And why? As the dollar went down, the gold went up. That was what I was trying to say. Now the dollar's realizing it got too cheap, and ahead of itself, you're getting your bounce and everything else is falling. I hope that makes sense to you, because it's the old 1, 2, 3 whiplash. Get too far up, you correct to the downside. You'll find an equilibrium out of this correction. I'll talk about that and a heck of a lot more if you take the research. You get to see it in the mornings. I put out the morning subscriber video for futures. I record about 5:10 a.m. Central Time. I start recording the Spider ETF at 9 for a reason. I want all the day's economics out, and I want the aftermarket trades in the stock market to get absorbed in the first half hour of trade. It's by design, and I find that that works well for the way that I try to put out trade recommendations. Again, you can move your cursor to the very top here to get and see that. You can go to iraepstein.com. Under the word research, choose either the morning futures or the Spider ETF. The discount will appear when you sign. It ends tomorrow. You won't see this again for a bit. I'm Ira. You take care.